So the SBA just changed everything. On April of 2025 this year, the Small Business Administration released a brand new SOP. That's their standard operating procedure, which tightens lending rules for the SBA 7A program. These changes took effect June 1st of this year, and they will dramatically affect how small business owners access capital, from startups to acquisitions and even refinancing. So if you're planning to get an SBA loan or funding in any capacity this year, you need to understand what's inside these new changes, because this one is a major shift. So I'm Brittany Calloway, and I work with entrepreneurs to help them turn credit into capital and capital into freedom. Now, let's talk about why this happened. So in 2023, the SBA truly made history. They loosened their lending guidelines more than ever before. They allowed partial buyouts, relaxed collateral rules. They cut different borrower fees and encouraged lenders to take more risks to get more small businesses funded. And it was working for a while. Thousands of businesses benefited. But here's the catch. When you open the floodgates, defaults rise, and that's exactly what happened. So when you combine that with waived fees, meaning the SBA wasn't collecting money on most of those loans, and for the first time in years, the agency lost money, this new SOP basically is now in place to kind of do a reset. It's not moving backward traditionally, but it wants to be more conservative in their banking methods. It's not a punishment, but more so a correction. So here's the first big change, and it says a lot about what's happening inside the SBA. They have now also released preferred lenders. These are the banks that could previously approve loans in-house on behalf of the SBA. These ones are now required to use their own delegated authority on 100% of their loans. Before, if a loan was complicated or in the gray zone, a lender could kick it up to the SBA for a second opinion, but not anymore. Why? Because the SBA just laid off also a lot of its staff. They don't have the manpower to review borderline files anymore. So for borrowers, that means one thing. Your choice of a lender matters more than ever. And if you're working with a conservative lender, they might start saying no more often. But that's why you need to be proactive and work with an experienced SBA lender who can still get deals done, because now they have their own decisions and they know what needs to be done preemptively to make sure you get approved and approved fast. Another thing to note is that SBA fees are officially back for some businesses. For the past few years or so, fees were actually waived to now stimulate borrowing. That's over now. Now every 7A loan will include the standard SBA guarantee fee, which can range from 0.5 to 3.75 of the guaranteed portion, depending on the loan size and your credit profile. It's not ideal, but these fees help the SBA keep their program funded, so it's a sign of long-term stability. Also, business owners now must be 100% held by U.S. citizens or lawful permanent citizens. Before, only 51% needed to meet that requirement of that in that LLC. So if you have international partners, it's time to review your structure before actually applying. As of right now too, there's been a long pause on SBA refinancing for MCAs or factoring. This one will catch a lot of people off guard. So because of this, you're not able to refinance merchant cash advances or factoring agreements with an SBA loan like you previously did. They were making exceptions previously for some cases, but it still is hard. In the past, this was just a popular move. People would use SBA money to escape their high interest short-term debt, but too many of those refis defaulted. Now, if you take an MCA or factoring deal, you're kind of stuck with it. So think twice before signing one. The quick cash option could block you from future SBA financing down the road. So these are just things that we have to keep in mind when we're going to apply with them. The SBA's also small loan program is also being scaled down a bit too. So it still is a great opportunity and option, but you want to make sure you're going in there prepared. The maximum loan size used to be about $500,000, and now it's back to $350,000. And the credit requirements also got stricter too as well. The SBSS minimum score for your business went from 155 to now wanting them to be in 165. So we have to make sure that we're building out our profile to make sure we have those scores when we go ahead and apply. So the paperwork that was removed in 2023, is it back? It is. So if your loan exceeds $350,000, it's now considered a standard 7A, which means you must pledge all available collateral, including potential second liens on your home. So in other words, SBA's experiment to compete with fintech small loan providers is officially over because they're now asking you to collateralize more than they did previously. So you want to make sure that you're really asking them for what you need, not what you desire and want to have, because you don't want it to cost you down the road. One of the best rule changes, though, that they've had was allowing the partial change of ownership, where a buyer could purchase part of a business and the seller could stay on as a minority owner. It made transition so much smoother, especially for acquisitions where the seller's expertise still added value. Well, that's also disappearing too as well. If a seller stays on in any ownership capacity, they also have to personally guarantee the buyer's loan for 2 years. We have some ways around that, but if you have investors, even small ones, every single person on your capital stack and table is going to have to sign as a guarantor. And that can really kill most investor-backed acquisitions and structures. So as I like to say, right, that we have to put a RIP to that. We have to come up with good structures to get around that. So here's a lightning round of other key changes though too, all reinforcing that we're back to some of the traditional lending discipline. Equity injections are also back to 10%. So when buying a business with an SBA loan, you must contribute at least 10% of the total project cost. You can split it, 5% cash, 5% standby seller note, but that seller note must stay on full standby for the entire life of the loan. They were a little bit more lax previously. Also, franchise directory returns. If your franchise isn't on the SBA approved directory, you can't get funded. So franchisees, double check that list before you apply for an SBA loan. Also, lenders must now prove that you need SBA financing, meaning if you're a high net worth individual with large liquid assets, you might not qualify. That test has been relaxed previously, but now it's back to being more strict. You also now have to define the 10% equity for startups. Startups must show 10% of liquidity, period. So that whole flexible interpretation is now gone. They've been more stricter about that. So these are also things we have to also make sure we're taking into account. So what does this all mean in plain English? It means SBA loans are still the best capital in the game, long term, with low rates and flexible use, but they're going back to being earned, not just handed out like they were previously. So if your business is well documented, profitable, and you have strong credit, you can still get approved. But if you're underprepared, you'll get screened out pretty early in the process and you won't be able to get the funding that you need. This is a time to make your financials tight, get your bookkeeping current, understand your debt service coverage ratio, and really clean up your credit. Because the lenders that thrive under this new SOP will be the ones who can present strong files fast and get funded fast. If you need us to help you with your SBA loan, make sure you can go ahead and book at thefundinglounge.com, where we literally do a pre-qualification on your business and your credit profile to make sure you can get funding fast. If you plan to apply for SBA funding soon, do it before another SOP comes into place. To help you prepare, we also created an SBA readiness checklist and a one-page SOP summary with every change broken down by the category: acquisitions, startups, refinance, and working capital. So you can download it at the link below. The bottom line, SBA loans aren't going away. They're still evolving, but this SOP brings lending back to fundamentals, proof, patience, and preparation. In my next video, I'm going to show you how to qualify under the new rules in 2025, including what lenders will focus on and how to structure your deal to get an approval quickly. See you soon.